Good morning all and welcome to today's video. So today I have 4 pairs on watch. I hope you had a great weekend by the way, and I hope you are ready for the week ahead. So today I have 4 pairs on watch. Those are SugarUSD, Pound Swiss, Pound Dollar and Euro Dollar. So I'm going to start off with my favorite of the bunch, which is SugarUSD. I'm going to break that down for you now, give you my thought process as always, and run through all of these pairs and tell you what I will be looking for today. So why am I looking at SugarUSD? I am looking at SugarUSD because if we just zoom out, if we just scroll to the left, you can see that we are at a significant high. The last time we got to the areas we are now was 10 years ago, 11 years ago. So we were at a significant high. We are at a, what is it, 6-month high, 5-6-month high, something like that. And you can see the next question I ask myself is, how did we get there? So you can see, what have I said before? So we get to this area, we do so by way of a bullish wick. I've talked about often how these bullish wicks can often be filled. We come all the way back up to that area, we tap into it, but notice we don't break above. I've talked about previously how on the higher time frames we usually break above, catch people the wrong side of the market before pushing to the downside. So what happens, we come up to this area by way of a wick, and notice that we wick to this area, we don't wick through it. When that happens, particularly on the higher time frames, we usually come back up. We do come back up, but what happens again, we wick to the area, not through it, and we also do so by way of a bullish wick. So we come back down, we come back up again. We do wick through the area this time, but we do so by way of a bullish wick. Often these bullish wicks get filled, and you can see it appears that we're heading up to that area again. So the reason I'm looking at this, I'm looking at all the little intricacies of what is going on. And if you just look at this, okay, when we push up from here, we have this impulse correction continuation. If we just measure the impulse, okay, and we assume that the leg out is often of a similar length, and if we take it from the base of the correction, we also know that we can sometimes, the volume within the correction can dictate how high the continuation out of this impulse correction continuation leg can go. So we measure it from the break of the middle section as well, or the correction, if you will. That would take us up to here. So that would potentially be that the completion of that impulse correction continuation. That would take us up to here. The next thing I'm doing is I'm looking at the next move. So I'm seeing that as that would be a completed move. What do we have here? We have this. If we just take this, if we just assume that this is a potential impulse correction continuation, but notice that we're finishing this leg correctively. If we just measure the, or this impulse correction continuation, if we just measure that, and obviously because it started from the same area, that would take us up to there. Notice that we have a middle section within that. We have that 1, 2, 3. Okay, if we just measure the legs there, these are all the little intricacies that I'm measuring. That takes us down to there. So that implies that if we have an impulse correction continuation with a 1, 2, 3 middle section, this would potentially be a completed move once we get up to here. If we just drill down again, we have a similar thing here. Okay, so we have that kind of impulse correction continuation. If we just measure the legs, that would take us to just up to here, where we would likely break above. Within that, we have that middle section. There we go. That's not quite the same length, but it's about 90% of the move, implying that this is a completed middle section within this 1, 2, 3, giving me a clue that if we did push up to here with a 1, 2, 3, with a 1, 2, 3 middle section, that would likely be a completed move. And what do you know, within that as well, we appear to have a 1, 2, 3 last leg. So if we just measure this, and then measure that to there, assume that this is an impulse correction continuation, that would take us up to here, where we'd likely break above. And then we would have that kind of 1, 2, 3 touch structure like that, okay, which makes sense. So with all that in mind, I do like this pair. This is, it ticks a lot of boxes, this one. So what I'll be looking for today is if we break above, if we So if we tap into this area and ideally break above, if we get the pushback down in the flag, then I'll be looking to get short either on the break of the flag or within it. And then I will be able to manage this down to this first inflection point for something in the region of 6 to 7%. And of course, if we got to this area, we would likely find our way down to here and down to the base of this structure before anything else, anything more complex was to form for something in the region of about 12%. So that is SugarUSD. I'm going to move on to the next pair. And of course, I have an alert set there just to see if we can tap into this area. If we do not, then I will not be looking to place a trade. So pound Swiss, let's just zoom out, get familiar with the bigger picture. So if you watch my videos regularly, you will know that I was anticipating a move to the upside, and you can see that we've well and truly got that now. Okay, why was I anticipating a move to the upside? Because we had this 1, 2, 3 touch structure, okay, with a 1, 2, 3 middle section, giving me a clue that this was a completed piece of structure. What do we know about these? We know that on the higher time frames, we typically break below. If we're going to rally to the upside, and as I said previously, I remember that mainstream media saying that they thought that price, or some of the so-called experts saying that they believed when price broke below on pound dollar as well, that price was just going to keep going. Whereas because of that structure that I just very crudely drew for you, I thought that people would likely get caught the wrong side of the market, as they usually do, believing what was previously support becomes resistance. It would break below and then rally to the upside. And that's exactly what's happened. And how did we rally to the upside? We rallied to the upside by way of an impulse, correction, potential continuation. Okay, meaning that we could be looking for longs. And if we just drill down to the daily chart, you can also see the repetitive structures that we look for. We have a 1, 2, 3 touch structure which breaks below a sharp area of liquidity, which usually implies that there's the sharpness usually implies that there's a lot of liquidity here. And we also have that 1, 2, 3 middle section within that, where if we just measure the impulses and we assume that they're of a similar length, and we take it to from the break, there's obviously a middle section within that as well. That takes us up to here, up to there, implying that that's a completed move as well. We tap into the area, break below, catch people the wrong side of the market, and then push up aggressively, just as I was anticipating. We have a bit of a scoop down. That's, it wasn't looking that promising at the time. It was looking like we may get some kind of middle section to push up and then push back down, give us a scoop double bottom, and then move to the upside. So I was staying away from this pair, but you can see sometimes this happens when there are still orders here. I've talked about how previously about how these higher time frame liquidity points are often like major train stations. And what I mean by that is the fact that at significant areas of value, just as with major train stations, sometimes a lot of people get on or off before price actually moves in our anticipated direction. Okay, so once we pushed up to this area, I'm just seeing this scoop back down as potentially more people trying to get on or off of the train, because this is a significant area of value, and then price moves to the upside. Okay, so that's an analogy I like to use. You can see we've had these impulse correction continuations since, giving me a clue that we're well and truly in a run of momentum to the upside. So what I'll be looking for today from this pair, I do have to speed up a little bit because sometimes I get a bit carried away, but that's just because I enjoy what I do. So I forecasted this on Saturday morning, and what do you know? It appears to be happening. What I forecasted appears to be happening. As I've said, trading is not about being right, and if you think it is, and you think to yourself, yes, I was right, and or you think to yourself, oh no, I got it wrong, that's not the right language to use. It's not the right mindset to be in. None of us know what's going to happen. There are countless market participants who themselves don't actually know what they're going to do before they actually do it, many of them. So how on earth could we say definitively what price will or won't do? Contrary to what you might read on TradingView in some of the posts. I don't know what the price is going to do. I don't know what the market's going to do, but I do know what I've seen in the past. And what I've seen in the past statistically repeats itself over and over again, which means that what I'm forecasting has a very high probability of happening. a lot of the time. So what I'll be looking for, you can see this little area of consolidation there. If I just drill down to the 5-minute chart, you can see we have a sharp move down followed by a sharp move up, where we kind of rallied from a little bit. That gives me a clue that that is where the liquidity sat. This here gives me a clue that this is the FOMO leg, as I like to call it. We got close. Many people were waiting for it to get here. They saw it start to move without them, in quotation marks. So they fear it's going without them. And that's a story for another day. So what I'm anticipating now is that kind of middle section where we end up pushing back down because there's still liquidity here that needs to be filled. And if we do, I'll be looking for the push up followed by the flag. And then I'll be looking to get long either on the break of the flag or within it. And then I will be able to manage it. I'll be able to get my risk off the table and likely trail my stop and lock in a little bit of profit if we reacted from these highs. And of course, if the higher time frame direction was to play out, and you can see we've got a lot of room to the upside on the higher time frames, there is obviously a lot of profit potential up to these highs, and up to the top of this structure and beyond. So that is, and of course, if we got some kind of larger head and shoulders pattern, just to touch on it, so if price went kind of sideways and did something like this, because of we often sometimes mimic what happened to the left, and you can see that we consolidated for a long period of time, there would still be a lot of profit potential even if price was to do something like that. So that is pound Swiss. That is what I will be looking for, and I'm going to move on. I'm just going to set an alert, actually. I'm sure I just set one, but for some reason it's not there anymore. Okay, there we go. Right, add alert, create. There we go. We have an alert just in case we come back down to the area of value, and if we do not, then I would not be looking to place a trade. So pound dollar on the higher time frames, slightly different on this one. So on the higher time frames, we have that 1 2 3 move that we had with pound Swiss. Okay, what do we also have? We have a near miss. Often these near misses when we come close to an area of liquidity but we don't quite tap into them, that implies that we're likely take out this near miss and take out the high that we near miss to. We have a 1 2 3 middle section, giving me a clue that this is a completed piece of structure. We break below, catch people on the wrong side of the market who believe what was previously support becomes resistance once we break below. And I've just noticed as well, you can actually see where they would have thought it was a retest. So what happens? Price comes up, they think this is a retest to go short, so they get short, and then it just moves to the upside. So we see these patterns time and time again. Then we have this. So that is a completed piece of structure, which I just showed you. That implies, because it has a 1 2 3 middle section as well, it implies that this completed 1 2 3 is a completed move. So then on the, as I drill down, daily chart, we have this 1 2 3 here with a 1 2 3 middle section, implying that this is a completed piece of structure. We then move to the upside, okay? And price leaves a footprint, okay? We have a sharp hook point there, okay? That implies sometimes that we will come back down to the sharp area of value, sharp move down, followed by a sharp move up. We've no reason necessarily to come all the way down here at this moment in time because this is a completed move. But we leave a footprint. Price leaves a footprint. We have the sharp move up, sharp move down, sharp move up. And notice when we push it, we near miss to that area. Okay, so we near miss to that area. We don't quite tap into it, implying that we'll likely find our way back up there, especially when we move up in a very non-progressive way like this. Okay, these are not impulses and corrections. This is just a long sideways correction. And we have this sharp move here. We have a sharp move up followed by a sharp move down. And if we just measure the impulses, if we assume that this is an impulse correction continuation to push higher, if we measure that to there, that kind of takes us up to where price is now. But the key detail for me is this middle section. So we have this 1 2 3 middle section. And if we just measure the, so we kind of have this, and then if we just measure the depth of this, I've talked about often how the depth of the middle section can dictate how high price breaks above because of the volume that's been built up. If we just measure that, I'm just going to get that off the chart, and then we take this from there to there. So what I've done is I've just measured the height of this middle section, and then I've measured assuming that price typically breaks out by the same amount as the middle section is high, that would take us up to here, which probably explains why price started to stall here and has continued to push up. Okay, so if we push up to this area with all of this in mind, what I'll be looking for is a push back down, okay, followed by the type flag that we usually look for. Hold on, what's happening here? There we go. So I'll be looking for price to tap into that sharp area of liquidity there, push down and flag, and if it does, I will be looking to get short, and then for price to take out this near miss to here and this near miss to that sharp hook point, which I just showed you a moment ago. Okay, so that is potentially, although on the higher time frames we're looking for a move to the upside, what I'm anticipating at the moment is for price to tap into this area, take out all these near misses, and then push to the upside afterwards. Okay, so that is what I'm anticipating. That is the longer term thesis. And if my alert does not trigger today, then I will not be looking to place a trade. So that is pound dollar, and then we have euro dollar on the higher time frames. Similar picture as with pound dollar. We tap into the last exchange of liquidity that I can see to the left, okay, which would be a good profit taking area for anybody that got short here. That would be a good place to get out. That is where they got out by the looks of it. And we also have this with a 1, 2, this 1, 2, 3 touch structure with a 1, 2, 3 middle section, giving me a clue that that is a completed move. We then push up and we have an impulse correction continuation. But notice that we do so, we move up in the way of a reversal structure, which just so happens to tap into this sharp area of liquidity by way of a 1, 2, 3. Give them a clue, especially as we have a near miss. If I just drill down, we have a near miss, price near miss to this sharp area of liquidity. Okay, giving me a clue that we'd likely tap into this area before pushing up, which we have. But notice we've moved up again in a very non-progressive manner, giving me a clue that we may be coming back down for a scoop double bottom before that longer term move to the upside. Okay, so that is the thesis. So as I drill down, I'm running out of time again. So that one of the reasons this is lower on the list, because with pound dollar, we kind of near missed to the sharp hook point, whereas with euro dollar, we've already tapped into it. Okay, so that means that pound dollar is more likely to push to the downside than euro dollar is, which is partly why euro dollar is last on my list. Okay, with this one, we have that move there. We have that sharp move up, where price moves from last time around. We have that 1, 2, 3. And just as with pound dollar, we have this, if I just zoom in a second, we also have that middle section again. We have this, and we have that 1, 2, 3. And if we just measure the middle section, and we assume, once again, just as with pound dollar, that the breakout is of a similar length to how high the middle section actually is, that would take us up to this area as well. Of course, sometimes it fills about 90% of the move. So that would take us up to this area and potentially up to this little hook point here as well, if we just take those measurements. So what I'll be looking for with all that in mind is for price to tap into, if I can just get my forecast on the chart, there we go, is for price to tap into this area. And notice that I've got, a lot of the time, we often get these little mini head and shoulders patterns. So when we have a little area of consolidation to the left, that is often where price will consolidate next time around if we tap into an area of value and push down, and then we would have that kind of mini head and shoulders pattern. So that is why I've kind of drawn my correction here. So if we tap into that area, push down and flag, then I'll be looking to get short on the break of the flag or within it, and then I will be able to manage it down to these lows. We have a near miss to here, which is a good thing. But as I've said, this low actually tapped into the hook point on the higher time frames to the left. So that is partly why it is lower down on the list. That is what I'm going to be looking for, folks. We also have, just to touch on it, we have this 1, 2, 3 last leg, which would also take us up to there if they were of a similar length. So that is the thought process. That's how I came to these analysis, how I came to these forecasts. And I hope you've enjoyed this video, and I'll see you again in the next one. Thanks for watching.